question. Medium-term financial targets, we set November of 21, the growth target of 4 to 6% organic growth. And, for the first 12, 18 months in my job, the most frequent question I got was, how would we take Smiths, which had historically been a 1 to 2% grower, and accelerate into that 4 to 6% range? So now we get the flip side of the question, which I much prefer. Are we being too cautious? And there's good reason for that question. We have 9 consecutive quarters now of generally accelerating growth. And as you noted, the vast majority of those quarters were in or above that range. So while there's very strong momentum in the company right now, there are a few things that we have to take into consideration when we provided the guidance. One, of course, as you just talked about in the previous segment, was inflation. We don't know where the new normal will settle in, but likely lower than it is today. About half of our growth last year came from price, so that will come down. The second piece of it is just the tyranny of arithmetic, cycling record comps. Even if we put up the same pound value of volume year on year, it's over a bigger base. So, that'll take a couple points out. And then while our biggest end markets, energy, aerospace, safety, and security, are all very strong, we do have some exposure to U.S. construction and a very small piece of our business in semiconductor. And those categories, of course, are softening.
Paul, I'll answer your first question and I'll get to my second point. I'm not wearing my W10. I love my W10. It is one of my most treasured possessions. And before I'm accused of endorsing a Smiths product, it is 55 years old and you haven't made them since 1971. So I just want to get that on the table. The second point is, and I hear what you're saying about the areas of strength and slowdown. Again, double-digit growth in the second half of 2023, safety and security, energy and aerospace. But look, the market decline in a very important revenue area in general industrial from a 15% revenue growth level in the first half to only 1% in the second half. I appreciate the business is going to be lumpy, but you're going to explain to me now exactly why you've seen such a precipitous decline in general industrial revenues, and do you expect it to continue, sir?
We didn't see slowing across the portfolio in the second half. We have some programmatic effects, in particular in our detection business. These are very large tenders, so maybe that's what you're picking up on. We entered this year, our fiscal 24, with record order books in 3 of our end markets. In our John Crane business, which serves energy, in Smiths Detection, which everyone knows, serves safety and security, and then in the aerospace part of our FlexTech business. So, no, I wouldn't read anything into the half over half numbers. I would say, with the exception of construction and semiconductor, those other end markets remain quite resilient.